Jonathan Gibbs here with David Harris, Harris Investment Group. This is his 4th year at Door to Door Con. What does Harris Investment Group do? Tell us what that does.
We're an alternative asset management company that primarily focuses on real estate investing. So 100 to 300 unit apartment complexes, Class C value add. We're looking for ugly and old, distressed properties with an opportunity to fix them up, improve them, and stabilize it for a better return.
And you're an exhibitor here this weekend.
I am.
You have a booth here, which is really interesting because there's a lot of companies here that are selling products and services into the market, but you have an opportunity, and it's no secret, there's a lot of money being made in solar and in door-to-door in general right now. I had over 100 sales reps at my company make almost $1 million last year. It's
awesome.
Absolutely incredible. And what's cool is here at Door Con, you can come and there is a way that they can learn on investing. What type of investments can they learn about with you here at the show?
Well, multiple people in our team come from private equity, hedge fund backgrounds, managing $10 billion funds. Mine is unique where I grew my own portfolio personally, and then organically over time, more and more people wanted to partner in my deals. And so it started out just me. And then over time, I started doing JV structures, syndications, and now we run a fund model. And so real estate's the emphasis, and tax shelter through the real estate is kind of our niche, but we also do some VC and some other options.
So can people come and they can invest in a single project?
We do have the ability to still syndicate, yes, when we're not doing our fundraise.
But most people are investing in a fund.
Correct.
And then the fund is investing in the real estate projects and other assets.
Correct. 5 to 7 core properties.
See, I think this is so important. This is something, I've managed sales organizations for 25 years, and there's an old school philosophy, which is get your salespeople to spend money, right? Because if they spend money, they don't have it, and then they got to go make commissions. I've never prescribed to that. I've always tried to teach my salesmen and women how to invest, in Bitcoin or real estate. So I think this is amazing. And salespeople it's no secret that if a salesperson has a lot of money in their bank, they sell less. When they have this big number, this big cushion that they're sitting on, they sell less. Instead of getting them to spend it, getting them to invest it into something, it creates the same motivation. They want to go out and earn more money, but now they have something that's growing for them, which is really incredible. Can you share some like anonymous success stories of maybe people you met at the show and what they're seeing and what you're hearing from them?
Sure, I could. I have a few, but I'd say we've had a few companies who've had exits, experiencing a large windfall in 1 year.
Well, that's another category.
It is.
Not just the individual reps, but actually the companies that are earning a lot of money. Okay.
And so when that happens, obviously there's a huge taxable event.
Yes.
And so with real estate, under certain circumstances, you can actually put some of that money to work in a diversified portfolio and generate a significant bonus depreciation loss benefit.
Or real estate that's in opportunity zones?
Actually, no. It doesn't have to be an opportunity zone. It could be. There's other benefits in that.
Okay.
But real estate itself, we do truck stops, gas stations. Mostly it's multifamily.
Wow.
But truck stops, at 50% of the revenue or more comes from the oil and gas. It fits under a unique part of the tax code.
Never seen a truck stop go out of business.
And there's actually ways to pick them up at 8 or 9% caps and resell them at a lower cap rate.
That's
amazing.
There's
still an equity play. But the primary reason is there's this large taxable windfall. They don't want to give a good amount of that to the IRS.
Yeah.
So you can put that money to work in a truck stop.
In a pre-tax.
In a pre-tax manner.
That's
and generate enough bonus depreciation loss benefit to shelter the sell or the capital gains of the sell of the business. And
huge.
So we've helped some companies sell for over $50 million and not pay a dime in tax, using real estate as the tax shelter vehicle.
Yeah, that's amazing. Because let's walk through the scenario for people watching who don't have exposure. Because in the United States, if you have a $50 million tax liability, you're going to pay over $22 million in taxes, and so now you have $28 million that you can invest and that can grow. In this scenario, you could invest all $50 million and the $50 million in growing instead of the $28 million, and you've avoided a huge tax burden.
Our hope, Jonathan, is that they only have to invest the $22 million that they would have given to the IRS. And instead of giving it to the IRS, they put it to work in assets that work for them, and they generate enough depreciation loss benefit from that money that shelters the full $50 million from being taxable. So you don't have to take all of the liquidity that you just came into
that's a good
now
point.
Put it illiquid into something that they may get some kind of cash flow later on. And so it's a little bit better than that, actually.
That's a lot better than that.
Yeah.
I should know better. We're doing the same thing with tax credits on utility scale solar, right? You can take that tax burden and you can invest it in solar. because of the tax credits
and
right
we're
now.
doing more and more of our multifamily value add projects with putting solar on the carports or covered parking. And so we get some added income, reduce expenses, and get the tax credit. So it's a great value add strategy to make a good return.
Yeah, it's good. I'm learning something right now full time. So, so individual sales reps that have done really well in the next few years, companies that have exits or just had some really great cash flow years. Come check them out at Door This is an amazing opportunity. This is actually very unique to come to a trade show and find ways to invest.
We've been fortunate to meet some great people, and because of that, we keep coming back. Sam's a good investor partner of mine, and so hopefully we've had a lot of value over the years.
Yeah, I mean, I've seen Sam's posts of his real estate deals that he's done on the podcast. He's posted about his real estate deals here. That's amazing. Give us an outlook of the market over the next couple of years. What do you see happening in the real estate market for the next couple of years?
Yeah, no, thank you. A lot of people are very concerned, and there's different asset types and classes that are seeing and experiencing different outcomes. But what we're finding in the value-add multifamily space is a unique opportunity because we cater to the affordable housing market. Right now, with interest rates being where they are, a lot of people are being priced out of buying a home, usually first-time home buyers. And so it's increasing the demand for rentals. And when the renter pool increases in demand and there's limited supply, rental rates go up.
Yeah.
So for someone like us that finds underperforming properties, fixes them up, improves them, we're able to hit a higher market rent range than what we expected in our initial pro formas. And so we're actually doing quite a bit better in 2022 and into 2023. Now, interest rates are going to still have an impact on the resale, but at least along the way, we've got a great, strong cash flowing asset. So we're not motivated where we have to sell like a single family home on a flip that's sitting empty.
That's right.
We've got great income coming in from the properties, and we're able to refi into debt that still cash flows because of the higher rent rates that we're achieving. So we're optimistic.
I think it's real great. I think, I tell when people ask me about investment, I just say, if you want to learn an investment category, make an investment. You'll never learn better when you have money on the line, and there's limited time. We all got to spend our time to make money. As soon as you put money on the line, it's amazing how fast you can learn something new.
You can learn a lot in the books and through classes, but the best way absolutely is go out and take some action. And
you can only learn so much karate in a book.
Yeah, that's right.
At some point, you got to get hit in the face a little bit. That's great. Well, thanks for being on the podcast.
Thank you,
really
Jonathan.
appreciate it. I'm going to have to get your number from Sam. Sounds like you're doing some really cool stuff.
Appreciate it. Thanks so much.